Good morning, everybody. This is Market Michael here. Now, I would have made a video earlier, but there's just not much to cover. Really, nothing much at all today. We're looking at a dead Friday with bank earnings coming out better than expected, but, I guess who didn't see this coming with tax cuts and all that. So, what's really you know, no one is questioning the balance sheets of these banks. And, you know, JP Morgan in 2017 was only up, their assets were only worth $200 million more than, excuse me, it might have been billion, but either one, you know, was only worth 200 million or $200 billion more than their liabilities, which is really not that much if you think about it. And if you think about on the scale of things, that's really kind of close to the red. Very close to the red. Well, supposedly the tax cuts gave them some nice profits though. Probably that like 200 billion. Oh my god. Well, I mean when shit hits the fan, it's not going to really matter. Those tax cuts aren't going to save them. And they're not going to save the rest of the country, because when you owe your debt, folks, you owe your debt and there's nothing you can do about it. And when major corporations start going under because they can't pay their debt, who has to absorb it? The banks. And then who can't afford that? The banks. You see where I'm going with this? Okay. Let's go ahead, and I just want to pull up some things here that may be of interest. This is just very interesting. I found this article. PNC profit fueled by commercial lending. Now, that's very interesting. You know, 8% in commercial loans. So, when those commercial loans, credit card and auto loans were up, home equity loans down, I guess that's a good thing. Consumer lending was roughly flat. Very interesting. Okay. But what I wanted to look at right here is charting. I wish I can. I'm not even going to bother, guys. RSI, MACD. I've been telling you guys that we've been trying to go positive on this bearish MACD for a while. And I was like, go long, boys, because I figured this was happening. I was a little bit early, but you know what happened. Look at that, 6666. Devil can't run away from me, boys. The devil can't run away from me. But we are back. We are here at this 50-day moving average. Now, I have a suspicion we might pop above it today. And this is kind of what I was looking for, actually. A pop above and then a pullback. And I said this yesterday. We were looking for a pullback. So I expect the 50-day moving average to give us trouble. But then we're most likely going to blow through that. We're going to maybe it'll take a couple days to recover. That'll reset those indicators, and then we'll be able to move higher. Now, as a top, we might just even get at straight up head and shoulders. This is the 61% on my fib, one of my fibs at least, and that's going to provide critical resistance as well as 7,400. That'll be as well as 7,500. Now, some analyst was like, this could go right to 7,500. Like, that would be the top, and then we're coming back down. That'll be a triple top in the markets, and we're gonna triple top, baby. Markets don't just experience something and then forget about it. Like this was these dynamics. Can you hear me? There you go. Okay, my apologies, guys. But anyway, this is what we're looking at. The comp, this is kind of it's a positive single candle, but it's still a candle that I'm familiar with that indicates tops. So, but we are moving higher. In addition, we got this same thing, very close here with the S&P 500. Most likely going to continue up. I think we're going to see a movement similar to this. We instead of having this giant run up here, we're just gonna have a run up, test it. This fondling here is going to make us go reset the indicators. It wanted to go bearish, but we couldn't. So I think that something similar is going to happen. That we're going to go up here and we're going to go not fail it, but really hard test it. Say we can stay here and then shoot up higher, but how high can we go? I don't know. It's not going to be high. 2750 is some resistance that we will hit. We will also hit this 2700 level. You know, that's where we had this little gap. So there's plenty of resistance spots. Now let's just look at the Dow Jones here. The Dow Jones is right at that 50-day moving average. You know, this is a horrible looking chart. And the same thing with the S&P. The S&P pretty much looks identical. I've been flirting with this, 200-day moving average. Even though we didn't get lower lows, we certainly tested. We were right at that 200-day moving average. And the reason why markets didn't free fall was because look at the MACD by the time we got here. The initial fall has to be like it has to be coming. We're like coming up, past it. Like that. Like let's say we fall. All right. Let's just forget that scenario. But think about this. This MACD kind of has to be up here and get that momentum. And usually by the time it shifts negative, we're already, at the worst of the selling. And then it just persists. In this case, the worst of the selling was kind of right here. Um, so that's that. And that's that. That's our 200-day, 50-day moving average. But give me a sec, guys. Okay, and the FaceTime failed. Great. That was my girlfriend. Don't know why she was calling. Now let's just pump up futures. I'm gonna have to just delete all these fucking trend lines because trend lines are fucking retarded. Whoops. Okay, guys. Futures are looking pretty topped off. Now, it's really interesting. They did well. I had to reset this indication here, but reset the pennant because it broke and it just wasn't accurate. So we're making it off the top here. It could still just keep trading in this range. I did say a couple days ago that I expected, not heavy growth, but I expected slow growth with bears fighting heavily, and that seems to be what's happening. Although the bears aren't fighting heavily enough, and it is losing. The bears are losing a tad here. Now I still don't give a rat's donkey's bunghole about the economic situation. We won't. They're they're not gonna come out and tell us that we're in danger zones. They're not gonna just come out and say this shit. We are we are at the cusp of a new time in history, and no one is gonna tell you that. We gotta see you know, what's gonna happen. Now, this economic, uh, you know, the Fed is gonna raise interest rates more aggressively to fight the inflation. Now, that's gonna be a problem. That's gonna be a problem. So, and that's one of the many factors. Now, a lot of people are saying that now we're not. This isn't the time for a recession. You know, and yeah, you might call me a little early on the gun here, jumping the gun, but we gotta wait and see. We have to wait and see what the situation is. I don't think that we're gonna be able to. I don't think we're gonna be able to get higher highs. I think we're almost peaked off here. Look at the CCI, guys. So what that means is we're gonna have to back down and then grow stronger, like we did. And that way, we're at that 50-day moving average, so we're gonna have to back down or go higher, but then back down off the CCI at least. I've seen situations where the CCI is backing down, but yet we're rising. Look here. CCI is backing down, and the RSI is backing down. But in this case, the CCI is going to back down, the RSI is going to increase. Well, not necessarily. All depends on what happens. You can't just go ahead and predict, you know. But this is what I see. I'm looking at these indicators and I'm seeing, well, the CCI is kind of peaked out here. It's got to come back. We're at the 50-day moving average and we're pretty far from the highs. We're not that far, but we're a good solid distance. What does this tell me? This tells me we are getting ready to try and move higher. But we're gonna have to see what the market wants to do. I think maybe we'll get that pullback. Then earnings will come out. We'll rock it up, but then we won't hit those highs. If we don't hit the highs, we know we're in for trouble. If we hit highs, then we're gonna. That's a tough question because that's signaling that we have found new trajectory. I'm gonna pull up the comp and look at a weekly chart. Okay, we are definitely on the weekly. We are bouncing. We're getting solid green here. So, we could definitely expect a move higher. Now, I've been saying we've been on the brink of breaking out of this MACD, this negative MACD for a while. And actually the Dow has broken out from it, and the S&P just started to. But this is the /ES. Okay, great. Okay. But anyway, you get the gist, guys. I'm gonna have to leave you guys here with that information. Uh, yeah, we got a bunch of things to think about, and we are going to experience a bull move up here, but how strong is the bull move gonna be? Where is resistance gonna be found? And what other geopolitical economic factors are going to be introduced? There's a lot to think about. We got a lot to work with, but at the same time, otherwise news has been flat. Futures have been moving slowly. Just started picking up, just hitting overbought on the on like a 30-minute on a daily. We are nowhere near strong. Check out that 30-minute. We are just spiking up. This could set up for a bad open if we're up all the way. We still got an hour to trade. So, yeah, I don't know. Well, it could spike up into the open. But we're at that resistance, boys, so just keep that in mind. We could blow through it, but then come right back down, reset the indicators on a daily. Well, I think that's that. Oh, God. All right. All right, thank you very much, guys. Thanks for watching. Please like and subscribe. Very interesting day coming up. So let's get ready, get those scanners up, and take care, guys.